Hi everyone, my name is Diana and I am an insurance agent here in California. And today we are going to take a quick look at health plans available in year 2020 and the subsidy available in California. As you may already know, or if you don't know, I'll say it again, health insurance is going to be mandatory in California starting with year 2020. And if you don't have health insurance, you will pay a penalty starting with next year. On the other hand, there are additional subsidies available through the state on top of federal subsidies already in place. So I just got access to the subsidy calculator available through Cover California, and we will look at a few examples. Now, before I proceed, I just wanted to let you know that this is for informational purpose only, and it's based on preliminary rates submitted to regulators. This is not the official quoting system. So before we look at the calculator, let's just take a look at the table, and let me get the table. I had it here prepared. Here we go. And this is a very helpful tool. I reference this many times while working with my clients. And basically, using this table, you can easily look at the household size. So that's the household size right here, and your income. So let's say you are family of two, and you can look at the income and see what you qualify for. So basically, if you are a family of two living in California and your income is this much, then you may qualify for subsidies. And we'll go over this really quick. So yeah, this table is available on my website, and I'll reference a link under this video. Again, we will come back to this table again. Now let's just look at an example, and for this I will need to open the calculator. So the calculator, give me just one moment. So here's the calculator, and before I proceed with the example, I just wanted to mention one thing, that receiving state subsidy depends on the difference between two numbers, maximum contribution and benchmark premium. And again, we'll go over in detail in a few minutes. Maximum contribution is basically the amount that you or your household is expected to contribute towards the premium. And as your income goes up, you are expected to pay more for your health insurance. The benchmark premium is the price of the second lowest cost silver plan for you, right? Basically the benchmark premium will vary based on your zip code and age. I don't want to make it boring and complicated. My job is really to simplify things, but I really wanted to say that before we look at the example. So again, there are many variables when calculating the subsidies, and let's just start with the example already. Let's say that we have a couple living in San Francisco. Let's just say zip code 94121. That's the one I remembered. And let's say that the income for this couple is $100,000, $100K per year. So let's just say that it's a household of two. So both of them are 30 years old, for example, right? So let's just see the results. Again, we are looking at next year, 2020. Okay, so here it could be a little confusing, but again, I'll try to make it easy. So as you can see, this couple doesn't qualify for any subsidies, basically 0, right? And they will be paying the full premium depending on the plan they choose. So if they decide to go with the lowest premium plan, which is Kaiser, they would be paying $704 every month, right? Now, let's just go back. Let's go back and let's say that this couple is making $68,000 a year. So in this case, we basically look, remember I was talking about the benchmark and all those terms. So we, and I mentioned the silver plan. So, you know, this couple basically would have a maximum contribution of $456 a month, right? And their benchmark plan would be $918. So that's exactly what I was talking about earlier. So here's the trick, because their benchmark plan costs more than their maximum contribution, they will be eligible for a state credit in the amount of $462. And their federal credit would be $0. So remember, we looked at the table, and let me open that table again. And so here we are, two people, 68,000. They fall right here. So they fall between 400 and 600% of FPL, federal poverty level. So they don't qualify for the federal credit, but they qualify for the state credit, right? So it's like it's right here. So if you fall right in this income category, then you would get subsidies from the state. Let's go back here and let's just twist this a little bit. Okay, so let's say this is a couple living in San Francisco making $100,000, going back to my previous income. But let's just say that this couple is 63 years old. Really want to show you something here. So remember, the 30-year-old couple had no subsidy. If they're a bit older, if they're 63, let's see what happens. Same zip code, right? Same zip code, same income, it's just like a different age. So in this case, as you can see, their maximum contribution is $1,221 for the second lowest silver, and their benchmark plan would have been $2,388. So if they were to buy this plan directly from Kaiser, this is how much they would have paid, right? If they get it through Cover California, they pay basically less, $1,221. So because the benchmark plan costs more than their maximum contribution, they would be basically eligible for a state credit in the amount of $1,167, which basically reduces the full premium. So I really hope that this is pretty clear. I know it's a little bit confusing with all these terms and state credit and federal credit, but I really want to try to make it easy for everyone. But if you have a specific question, obviously feel free to reach out to me directly and I'll help. I will have a reference under the description of this video on how to reach me. So basically, and I'm looking at the silver plan, but you can, other plans are available as well. So basically, what I wanted to point out here is you can see the subsidies could be $0 or it could be quite generous, as we saw in the example of the 63-year-old couple living in San Francisco. I don't want to talk. I don't have time, and I will not be able to cover this the plan designs in this video. I have a new video coming up very soon dedicated specifically to this topic. So please like, share, and subscribe to my channel. I really love helping people, and I'm creating this educational videos to help my clients and others understand how insurance works. And if you can spare just a second of your time and share this information, I will really appreciate it. Thank you, and I will see you in the next video.